Hi there, my name is Adam and I'm the Chief LLC Officer here at Start Global. My job is to take away the stress and worry out of your day by providing clear information on a range of subjects. Today, we are delving into the world of taxes for solo developers, aka indie hackers. These are the geniuses who build softwares for clients and or themselves. Basically, if you're one of these, you are a total smarty pants. So let's start at the beginning. Income for solo developers can come from a variety of sources, such as freelancing marketplaces. This could be through Fiverr, Upwork, etc. Contract work for clients, consulting, their own software startup, API as a product, and video courses on programming. Again, lots of avenues for lots of streams of incomes. Bravo, you smarty pantses. Some developers may even work in conjunction with other developers and could have multi-member LLCs. But before we go down that rabbit hole, let's tackle this one. Today's video will just be about solo developers. So, the hint is in the name solo developers. That means they will have a single-member LLC. A single-member LLC is a pass-through entity, aka a disregarded entity. This means that the government considers the income of the LLC just like the income of the individual, which is different from corporations where the income of the corporation is separate from the income of its shareholders. Basically, if the developer owns a single-member LLC, which is their content that they create and then sell, then the income of this content and the taxes it has to pay are calculated like it is just the creator's individual taxes. However, some solo developers create something called a C corporation. This is instead of a single-member LLC. They do this if they feel their startup may need to raise VC funding. Going back to the streams of income I mentioned earlier, these can all be deposited to the single-member LLC, which means the incomes of the LLC and the taxes of the LLC are calculated like the developer's individual taxes. In simple terms, if you are a lone wolf, the government lets you howl at the full moon. Oh! Back to being a human now. The single-member LLC taxes equals the developer's individual taxes. Mostly. Yep, mostly, it's that word again. That's because there are other charges which are outside income taxes. Sadly, no one can escape these, just like old age or Mariah Carey at Christmas. Okie dokie, let's get down to taxi business. There are a few different taxes for a developer. Number one, federal income tax. This ranges from 10% to 37% depending on how much your income is. More money, more problems. Number two, state income tax. Every state has income taxes, so there is no escaping this. Hang on, unless you live in Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. These states have no income tax. Woohoo! Number three, self-employment tax. If you earn over $400 a year, then this has to be paid. This comes to 15.3% of your income. Self-employment tax includes 12.4% for Social Security, this is old age, survivors, and disability insurance, and then 2.9% for Medicare. This is hospital and insurance. Number four, sales and use tax. This is paid to the state and then the local governments. This is most apparent when you are selling physical goods. And even though developers don't sell physical goods, some states class digital products like physical products, so you may have to pay sales and use tax in some states. Is it in your state? It could be, but I'm not going to go through all 50 states. I've got things to do. So I would recommend Googling your state's sales and use tax. And finally, number five, state franchise tax. Some wonderful states charge a tax just for doing the privilege of doing business in their states. Who do they think they are? Whew. So that's all I've got for taxes that developers have to pay. So let's move on to something more fun. Deductions! These are certain purchases that can be put through as business expenses to reduce your taxable income. These include payments to freelancers or contractors. These could be product designers, copywriters, marketing agency, or other developers. People who make it all come together. Software expenses. This could be Stripe, AWS, or other packages. Equipment expenses. Now this is very, very important. MacBooks, keyboards, mice, and other accessories, even home furniture can be included. Since these are assets, a percentage of the expense is taken as depreciation each year, not the whole thing, just the depreciation. Home office rent. A portion of your home rent can be deducted if you work out of home, which is probably true because working at home's the best. So there we are, a little bit of pocket money back into your bank for just doing your job. And I mean, you definitely need a state-of-the-art MacBook and a double bed to work properly, right? Okay, maybe not the bed, but you get the idea. But I hear your next question. Oh, great, intelligent, handsome Adam. Thank you. When do I pay these taxes? And don't worry, Mr. Handsome's got you covered. For income and self-employment tax, if you're expected to owe tax of $1,000 or more a year, then you will have to pre-plan your taxes and pay quarterly throughout the year. These are called estimated taxes, as they are, well, they're estimated. And as I said, these are paid quarterly, so you are due to pay during 4 periods. April 15th, June 15th, September 15th, and January 15th of the following year. So if you have a birthday on one of these dates, sorry, the cake and the balloons, they're gonna have to wait. Hey, Adam from the future here. Have you heard about Start Global's all-in-one package? You haven't? You really should. They will manually file all your state and federal taxes on time, take care of your bookkeeping, your compliance, and even assign you a registered agent who will help you with any problems you have. Just visit the link in the description below to find out more and take away the worry and the stress so you can concentrate on running your business. Okay, I'll let past Adam carry on now. But before we say our emotional goodbyes, hold back the tears. I wouldn't be doing my job if I didn't give you an example of a solo developer working out their taxes. Remember, these are just some rough tax calculations. Let's say this developer lives in Florida. Nice. And their name is Alex. Alex earns $120,000 a year, and let's say all their expenses can be deducted as $40,000, leaving $80,000 as taxable income for Alex. This means $13,216 is federal income tax. Remember, there are various tax brackets of $80,000. And it means $12,240 is Alex's self-employment tax, because that's 15.3% of $80,000. Alex has to pay $0 of state income tax as they live in Florida. And Alex has $0 sales and use tax since there are no physical product sales, meaning Alex pays no state franchise tax. Okay, so we need to add $13,216 with $12,240. Together, that comes to, big brain time, $25,456. And then we take that away from $80,000, which means Alex takes home a lovely sum of $54,544. Just enough to buy a pizza. Anyway, thanks for taking the time to watch this video, and I hope this has helped any solo developers out there worrying about their taxes. As always, please check out our YouTube channel for more videos on LLC subjects, and subscribe to stay up to date with our new uploads. I'll see you next time. Bye.